Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on FSR. We think electricity is here to stay, and a 95% move down in 6 months is nothing.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey everybody, welcome to the Laughing Stock. I'm Ranger Dane. I'm Reddick Johnny, and this is Ranger Dane. How are you doing?
What's up, everybody?
I'm a bit confused already today. A lot is going on, you know.
This is my first beer. I must not be quite where you are.
I have. What do you call it when you eat because you are sad?
I don't know. Is there a word for that in English?
Comfort eating, and I've been also.
Oh, comfort.
Nada. Before we go into the recent BNED news, what do you think about FSR?
Oh gosh,
Fisker.
That's another one that's it just keeps going, man.
Yeah, we have had it when we make the intro videos. We discuss a little bit back and forth about which one to choose from. We've seen it a few times in the daily movers in a negative way. And I see a lot of these EV stocks. They are a bit up and down, right?
Yeah, they always are.
I think we had Nikola a while back. They are. I remember. I said I was in Nikola before, and I think Fisker is a little bit of the same thing. They are both heavily down since the beginning, and very risky, I think, looking back at what I did in Nikola. Even though I made money, it was very risky.
Yeah, well, I mean, you know, when you're trying different things, sometimes it takes you got to take the risk on just to see how you feel about it in the long run.
Yeah. Yeah, no, I'm, you know, a lot of things going on now, and we were waiting on some BNED news on Thursday when I did a stream for a Q3 report, but then they filed like they were going to reschedule it. And then the price held up pretty good till the weekend. But then after market yesterday, was it, is that right? We ended, or we got like a filing that the market has interpreted like a very negative thing, and the stock is down now in the aftermarket, and I think Monday can potentially be ugly.
Yeah, I mean, I don't, like I said, I don't always base too much on the aftermarket just because there's not as much volume. But with everything going on, I mean, I'm not really surprised, to be honest, that you're going to see quite a bit of volatility coming up here too, as they try to figure out how they're going to refinance, which we all knew they were going to restructure. So if you're selling out of your shares now and you didn't think they were going to like restructure or something like that, I don't know what you thought. Maybe it's all shorting. Maybe people are just shorting. I know I've been watching the back and forth on Courage's article on Seeking Alpha, and Henrik Alex, who's a pretty prominent trader on there, he took a short position. And there's been a lot of back and forth between those guys on there saying, you know, what their thesis is. And you can argue whether you think BNED's going to pull out of this, which obviously we still think they're going to make it. I don't think the news is all that devastating, especially because the worst part of all this is in hindsight, they actually kind of like they did excellent, you know. I mean, in terms of their yearly revenue and everything, well, quarterly, the actual report, which was in the same filing at the bottom, which is subject to change, but honestly, it doesn't seem like it will probably change much. Those numbers are pretty locked in stone. Yeah, there's going to be probably some kind of equity dilution, and they said it could be at a substantial discount, which I feel like they have to say that regardless, and it may be. I'm not saying it's not. So once again, this is still an extremely risky stock. You know, it's not something to not be taken into consideration. But at the same time, um, I just think that there's going to be a way for them to basically get through this period. And anybody who's negative right now on it, I feel like if they can get through this next year or so, as long as they can restructure properly, or whatever kind of equity raising they do, they still didn't really talk about like preferred shares or anything like that. I don't know if that's a possibility. I don't know if anyone would want to purchase preferred shares or something like that. But if they're able to get through, the negative comments are all on guidance, as if nothing will change in terms of their growth. If they can continue to grow faster than we are anticipating, or even close to what they're anticipating, they can make it through this period. So that's just one thing that I think it's important to keep in the back of your mind, that yeah, the numbers are tough right now. Don't get me wrong, and that's usually like that's the kind of companies I look at. I look at these companies that are in this situation, because those are the ones that can turn around big, and most people have already given up on. So, I've already. I think it's kind of strange. I wrote a comment on Seeking as well, saying that if you're in it at this point, you knew they were going to refinance, of some sort. There's going to be some kind of restructuring or some kind of equity offering. So it is what it is. Monday is probably going to be super volatile, but I even put in my comment too that you never know. This is a momentum stock in terms of the size of it and pricing of it. So there could be a ridiculous amount of volatility on Monday going forward. It could be bad, it could be good. It's just hard to say right now. And really, I don't think until we get probably the earnings transcript and we can really hear what management's talking about, it could really trail off for all we know. But it's a way to get your cost basis down, and we'll see. I mean, this is one of those things that's got real high risk, real high reward, which is typically what you and I tend to get into.
Yeah. No, I agree, and I think this is of course a bit pointless to say, but if we didn't get the news about that they are looking at the ways to refinance right now, and we just got the Q3 report that we kind of waited for on Thursday, this would be a very good period. But then of course we cannot ignore that this is the reality now. But like you say, they were going to do this anyways. It's not like it's surprising. Maybe it's a bit surprising that they had to reschedule and that it happened in this exact way, but let's wait and see what they say on the conference call. Maybe they will update us with some better information than just in the document that they have filed already. But I have pulled it up. We can pull it up a bit later today in the stream. But I think the word, like you said, substantial discount, scares a lot of people. But they also say, like, as well as a potential equity offering. So it seems like, okay, it seems realistic that they're going to do that. But I am very eager to listen to what they have to say on the call and start to, like, put the picture together. Because right now we don't have all the information. And like you say, if they go through this and manage to get a deal and survive, the model has proven now that it's growing and it's working, and we know already from the DOE that the decision about opt-in, opt-out is gonna be postponed till at least November, you know. So there's a lot of
Right.
things still going.
Yeah, and just the fact that the Department of E failed to reach a consensus too is another huge point that has kind of gotten overshadowed in all this. But to reach a consensus, yeah, I mean it's one of those things that I don't think we have enough information to really make too much more comments on it. At this point, like I said, we're already involved. So you know, it's not the time to back out now. If you think something like I knew this restructuring was coming, so you know, whatever. It can it get ugly? Yeah, I believe it can. So once again, you know, I just like to say as a disclaimer, you know, if you're interested in this kind of thing, like there's a lot of moving parts here, and this could obviously go wrong. So, um, you know, when we're saying that we're still bullish on it, that doesn't obviously mean that, you know, it's a buy. You really need to do your own due diligence on these kind of companies that me and you tend to get into. But all it takes is them squeaking through this period, and you could watch this become, you know, because the business is improving. I think that's the most important thing. Is right now they're in a tough spot, but the business is improving, and it's substantially improving. I think it said that was 50% revenue increase from the FTC model for year over year. I mean, that's insane. You know,
Yeah.
like if you were telling that for most other things, especially if they didn't have this stupid debt with the interest rate. But I mean, that's like as bullish as you could be for something. I mean, that's massive.
Yeah. And I saw Courage reply. I think it was to Alex. But if you ignore the little argument they had there and just look at his comment isolated, he said something like, "Who shorts 70 cents stock where the business is so solid?" And I think that's also a good point. Like he's not lying about that.
Well, this is what I was saying too. Is then Henrik responds. I got it pulled up here, and he says, "Me, if the news is sufficiently bad like that," and then he's saying that he already covered for a gain. And I mean, Kurtz goes through and he actually looks up on Nasdaq because you can look up and see what the actual after hour buys were, and he calls him out because he's like, "Listen, even if it was in the 80, he's like, what did you short? Like 20,000 shares." So he's basically
Yeah.
saying like, yeah, you can say you shorted and you made this quick profit, but it wasn't like a big deal. And you know, Hendrik doesn't really say much after that besides that, you know, it was a decent little gain for him. But that's what I'm
Yeah.
saying. Like Hendrik's looking at it like, oh, this is bad news. I'm going to capitalize on that bad news in the short term, which, you know, these guys can go back and forth about it, but what does it matter? I mean, Courage is still, he's still going to be under his thesis that it's going to make it through this. Henrik can sit here and say all he wants, but he doesn't have any skin in the game. So who cares at this point now, at this point?
Yeah. And I saw on stock tweets also, there was some talk about that before the earnings on Thursday, there was some talk about, oh, you should sell because I know this space and I have contacts and blah, blah, and they are losing a lot of contracts with their model. And that turned out to be wrong. They have not done that. So there's a lot of speculation going on ahead of these reports, a lot of misinformation. And I just want to I prefer to wait for the call and get the news directly from them. But no, it looks a bit ugly right now.
But yeah, and I mean, it's going to be short term. There's going to be some volatility going on here, and this could substantially drop, like we even said on Monday. So, you know, the other thing too is if someone is interested, you know, you might be able to time a real bottom here coming up, because it might be that the risk now starts to become kind of high for most people. And in that scenario, it might take a while for things to actually transpire. But the problem is when it does transpire, it's going to happen fast.
Yeah.
So if you know, if you're trying to time these kind of things, that's why I tend to trunch into these things instead of trying to time it, because you know, I would rather find like a medium cost basis towards the bottom than trying to time an actual bottom, because if you do and you end up missing it, then you missed out on the entire opportunity anyways. So that doesn't really make sense to me in the long run.
No. And aftermarket of Friday, I think the stock went down, what was it, to 50 cents?
Right.
And then it came up a little bit again. So, but like you say, usually I don't pay attention too much to the aftermarket because of the small volume. But
Yeah. maybe
it can.
I don't maybe it only got down to 60. I don't know if it got down to 50, but
Okay,
it
60.
did
Yeah.
bounce right back up from I
Yeah.
think it's at like 74 75, which is kind of it's funny because that's where the stock's low floor always has been, is around 74
Yeah.
75 cents.
Yeah. And that was what I was gonna
So
say. Like you can get these initial drops, and then, but we don't need to sit here and try to predict what's gonna happen. We just want to. Okay, it's not exactly what we wanted, but it's also not surprising that they had to address this issue with the debt sometimes. And like we are pretty happy with the report on the business and the model. And then let's see how it will work out with this potential dilution. But I'm just a little bit with the wording in the document that like as well as a potential equity offer, substantial discount. What is that? And compared to which price, you know? So yeah.
yeah, and it's important to consider too. BLCM put this comment out there saying that the stock is low float because, as we figured, over 50% of the shares are held by insiders. And he goes, and because of that, it'll be easy for BNED to raise cash this way. So, I mean, he's right. So, if 50% of your stock owners are insiders, it's to your extreme benefit that if there was an equity offering, that they would contribute to that. You know what I mean? Because that's everything that they own. So if the insiders are at least 50% involved, that's their part of the equity market. You know what I mean? Like they don't want to give it up and go into bankruptcy because that's their money.
Yeah.
So it would be to their benefit to keep this going and to figure out a way to get through this period. I'm just trying to. I was just going through some of these comments to see if there's anything else I wanted to comment on before this ended.
I'm just gonna switch screen so I pull it up here so people can watch the comments. There we go.
Go for it. But yeah, because now I'm down to where Courage said that BNED's total trailing month adjusted EBITDA was 25.6 for ending January 2024. And he said also the Q1 forward for year 2024 data point is low and could get much better. So and then some of the other guys like Michael Loftus who started getting involved. I noticed that he started talking a lot on Twitter about this. He said everyone's freaking out, but the offering's fine if you participate. He's like, this is a bad business that's getting better. If you need to fix its balance sheet and there's going to be an offering, just being sure you're part of it. He's like, if the results are good, why wouldn't you want to, add to it? So, this is another reason to tranche into things too. So, if you put all your money into it at one point and something like this happens and you can't add to your position as something like this happens, then yeah, you will have to deal with the dilution. So, this is why I feel like you have to limit kind of how big your positions get, just in case something goes where you might need to actually average down into something. And, people can argue that, you might want to average down, but at the same time, sometimes you have to, especially if you think the thesis still stands, which everything about the business tells me it will be.
Yeah, it does. And maybe it takes a little bit longer, but still they need to address this before the year of the end of the year, so I'm just
At the end of those comments too, private investor puts up a good point. He says, you're only really scratching the surface with your comment. And this is to Hendrik. He said debt isn't coming due until December 28th, and most people are focused on the immediate next quarter, especially with the EBITDA guidance set at 40 million, which frankly seems likely to be exceeded as they've basically beaten every financial metric so far because of the FTC model and how it's growing. So he's like, I'm curious if you forecasted the EBITDA for Q2 of forward year 2025. Because he's like, by that time, it's expected that hundreds will have adopted the FTC model, ideally timed for seasonal surges, which would be Q2 fall and Q3 spring of next year. He's like, that is the opportunity that we're betting on. The acceleration of store onboarding spurred by the recent DOE concerns makes it possible for the company to easily generate 75 to 100 million in adjusted EBITDA by that time. He's like, depending on how quickly they continue this trend. The company has demonstrated a viable strategy for balance sheet improvement, continued progress on the RFDC model, and eliminated the concern of it being undervalued in the sell side process. Which they didn't mention anything about being bought out, which is good because that was one of the other concerns that we had recently. So it sounds like they're not going to the sell side. And the Department of Education also just got sidelined for the next year. So the thesis still stands, and people are just overreacting. And then everyone, he just comments and says, but there's still a 15 plus million EBITDA improvement next quarter just to make their guidance, and he says it doesn't matter. And then everyone's asking, how does that not matter? That if they can get through it, like what do you mean that doesn't matter?
Yeah.
You know what I mean? Like,
Yeah.
it does matter.
Yeah. No, I think, and we talked a little bit about this also, like, there's a lot of people coming when after things happen and try to get their points across then. And it comes down to, like you're saying, that maybe there's some different styles into play here, and both can be right in the end, we have always had like a longer term. We are not particularly long-term investors, but we had a longer term than till like the summer.
Well, that's also kind of subjective because, like, compared to some people, like I would say, I'm not afraid to hold something for a year or two.
Yeah.
It's usually a thesis will kind of play out. Like this one could be another year or so. This could be a little bit longer, just depending on who knows if they can get through this part here and prove that they can make it through this stage, because that's what's kind of confusing. So he's saying that they need the 15 million just to get through this next quarter. Well, if they did an equity offering here and they made the 15 million, or even as the one guy had suggested, doing 40 million shares at 75 cents would give you $30 million. That would give you enough to get you through this next quarter, which means you wouldn't have to worry about the debt. And then, the model just keeps continuing to improve, and you have till December to restructure the rest of the debt. So yeah, there could be a dilution here, but we'd already said, I mean, I was talking, if this business had turned around and we were talking about if it had gone into where it's mandatory in all schools based on, the DOE's writing, we had talked if it had traded, this thing could be like a 20 bagger. So even if they diluted shareholders, let's say they doubled the amount of shares, that would mean it could be only a 10 bagger. So, I'm sorry, it'll only be a 10 bagger, not a 20 bagger.
Yeah.
There's still so much room for this business to improve. And that's why, the real bull thesis here is like that, we just have to get through this section here. If we could do it, then we'll be fine.
Yeah, and
I get it.
that's
It looks ugly in the short term, but
I think
we kind of knew it.
Yeah, that's why I was saying, like, if you strip it down, there has been two big concerns. One is the debt, which is due soon. So we knew that they were going to do that. The other one is the DOE stuff that is going on. And right now it seems like that's going to end. At least right now it seems like they are leaning towards keeping the opt-out, So those
at least
two,
for the near-term future.
Yeah, so those two things still stands. And until we get them out of the way, we don't really know which direction this is going. But our point all the time has been that they're going to pull through it and continue to grow. And right now, I still believe that point stands. But again, there's a lot of comments. So if you haven't read up, go to the Courage and Conviction article and go through the comments there. On the SEC side, you can find what is it called? NT10Q, which they have to post when they have a reschedule like they did. And here you can find the wording that we have already been talking about, like substantial discount, potential equity offering, all those things. And then in the bottom, you can also see that they report the numbers, which we have gone through already. That looks a bit good. So you have some information already. And of course, this is what sent the price down off the market.
Right. So, like I said, it makes sense to me that you do this rights offering. Um, if these guys were saying 75 cents, let's say 75 cents because that's been kind of the baseline price for the stock for a while. And you would do that to already current shareholders. So it's in their interest to pay 75 cents essentially. So it wouldn't necessarily dilute the share price terribly because we would be all okay to buy it and just continue. We would be taking the equity on. We're okay, with paying more into the business. We want the business to succeed. And then from that point, that gets us up into December. And if the Department of Education isn't able to come to a consensus agreement by then, I believe that just gets overridden and the opt out would stay as of now because of the way they chose to change the law structure. Now, if they would have just said this is going to some kind of legislation and just changed it without having any kind of consensus view, well, there wouldn't have been much of a chance. But at this point, because it's a neg reg type regulation, they all have to come to consensus. So if they don't come to consensus, it doesn't really matter. This could sit there in perpetuity, basically, and never come to some kind of finalized agreement. So we have the rest of the year. I think at this point, the more important thing coming up will probably be the earnings transcript. That's where we can probably get some color from management on really how things stand and what they're doing. And, we'll be able to talk and listen to them and see what they're saying. Because
Yeah.
that's going to give us the biggest hint or clue.
Yeah. And right now we don't really know when that's coming. But what did you say, Dane, before the stream? They have like a couple of weeks to actually file it?
Yeah, I think typically with these, when it's the NT for the non-timely, you have 5 to 15 days to file it, is what it said. Now, I think you obviously can go over that, but I don't know if you get penalized or what it exactly is, but you can go past that. And it has with what you have up right now on the page there, it says within a time period prescribed in Rule 12B25. That's where it talks about that.
Yeah. And I guess if you are the management and you see it's in their interest to do this as quickly as they can, right?
Yeah. Obviously, I mean everything's a time crunch right now, and that's even what they're basically saying. That's the reason they didn't get the earnings and everything out is because this is the major focus right now. They got to get through this first.
Yeah.
So they're not sitting there playing around trying to do all their accounting stuff right now and make sure everything's all the T's and I's are dotted and crossed. They're trying to make sure that the company survives and gets to a point because it would be foolish to put all this effort into getting this program up and running and turn this company around and then, have something stupid like this debt be, the killer.
Yeah.
So
No, so still interesting to follow, and we are gonna of course talk about this in the coming weeks on every stream, I bet, and we're gonna keep you guys updated on our thinking. So far we have been completely transparent with our positions, and the whole point with the stream is to show you the research process, so everything is as transparent as we can possibly be, and we will let you know if we change our thinking and if we add or sell out or anything like that. So right now I'm just still excited to wait for the earnings call and see what happens after then and this coming week. But I'm not, I must say at this point, I'm not super scared if the price drops on Monday, but of course I'm going to follow the development very closely. It's a big position for both of us.
I'm probably going to wait because the other thing too is if they're going to do a rights offering, I'm probably going to wait because if I was going to add shares, it'll be during the rights offering. So I don't know if I'll be buying up until that point. That's kind of what I'm waiting on. So if the share price is to drop on Monday, I mean, we'll see, but it's I guess either way, I guess it doesn't really matter how you buy your shares at this point.
No. Yeah. Now we will update everyone on what we see here, and maybe once again if we get the Q3 earnings on one of the days we do the stream, we can go through it a little bit when we are live, So.
Yeah, you can bet if it comes out, I will be all over it.
Yeah. So moving on to ALTO, ALTO is also coming with some earnings on Monday. I'm very excited to see what's going on there as well. I hope I don't get a second a small disappointment. ALTO had a huge disappointment last quarter. So that's what everyone is waiting for now. Is management, can they prove to us that they are doing a good job this time or not? And personally, I'm very eager to hear about the development on the carbon sequestration program and how that's going, because they have kind of promised that they will have some solid information and development on that in like June, July, August. So, which is pretty close this year,
Yeah, and the last post I think I saw from Domo, he was saying that the March crush margins that he thinks now are over 5 cents. So I
Yeah,
mean that's the best they've been in a while.
yeah. And I saw,
So I would think this is going to be a great quarter for him.
yeah, I saw also Kingdom is involved in ALTO. And by the way, if you manage to tune in on their quarterly reports, Kingdom has been on the call a couple of times and asked questions, but I think he hasn't been on the last ones. But I see that he also had a tweet about it, that he's expecting a beat, but Q1 has been blah, he says. So maybe not
Well, yeah.
too exciting, but still, that's what you want to see now after what happened in Q3. If they can beat the estimates, I'm happy with that.
Yeah, and I think where the actual stock price is trending right now, I mean, it's obviously continuing to be discounted for that last quarter still. So
Yeah.
if this quarter beats, I think that'll be the first thing to actually get the stock price to react to some good news finally.
Yeah, and then let's say they manage to get something about the carbon sequestration moving forward. Maybe that comes with an update or even an asset sale. And I'm also curious to hear about what if they're going to comment on the Western plans on Monday, and the potential to sell those off. I know some of their competitors have been on their earnings calls now recently, talking about that they are looking for to buy stuff from other companies. So I see there has been some speculations if they're going to sell some assets off ALTO, which will be to raise money for the carbon sequestration program. So now there's a lot of potential things that are good there too, but you know how we were before Q3, how we were very positive, and then it went down 60%.
Yeah, that was, I mean, but still, even that, I still think that was oversold. Even where it's trending right now today, I think the market now they're just waiting. Like it's there's not much else to say. Like now we just got to see how ALTO comes out and performs.
Yeah.
What did they? Do you know what they're expected for revenue and
The
for EPS
estimates?
for them? Yeah.
I must see so I don't confuse with BNED, but I think it was.
I think they're. Is this updated? -8 cents, I think, is what they're.
Yeah.
thinking.
Yeah, I think you're right about that.
So, I mean, if it was positive, that would be huge.
Yeah. And
So
also,
we'll see.
because going into the Q3, everyone expected them to crush estimates, and I think since then the business is still going well. So I'm not going to say that I'm surprised if they do beat estimates this time as well. But let's wait. Let's wait and see. I'm not going to be bombastic here.
Yeah, no, I mean that's two big stocks for our positions. So
yeah,
it'll be another interesting week.
Yeah. I haven't seen I saw someone comment, because I remember I talked about this before on Alto, that Jeremy Raper has sold out of his position. I just read that somewhere. I have no idea if that's true or not, but I haven't heard from him in a while about Alto. Read that somewhere.
Yeah, knowing from what I know from Jeremy, he's someone who kind of wants to make quicker, kind of swings on some of these things. So, and I think he's been focusing more on Australia since he's living out there right now.
Yeah.
I listened to his last podcast, and I follow him on Twitter too, or X. So, I usually see him posting more about like Australian companies. So, we'll see what's going on, but yeah,
Yeah.
he might not be in unless maybe there's possible, interest in the, like you said, the Western assets. So, because I know that's what he wanted initially.
Yeah, he wanted because he sent a letter to management in July, I think it was 23, asking them to sell the entire business for like $6.50 per share, I think, which would be a
Right.
nice gain from there. So I don't blame him for that, but it was a bit on a collision. Once again, different styles, but he collided a bit with Justin on his thinking, because Justin is way more long term in his thinking, and he has estimated it can go to like 10, 15, 25 eventually per share, which then would of course be stupid to sell it for 6.
Right.
But and Justin is a big owner here, so I know for a fact that he he's following these very, very closely. And as always, I suggest everyone who is interested in Alto to read his articles. You remember the article he put like around 1 year ago in May? That was a very long and thoroughly done article, I think.
Yeah. No, it was.
Yeah.
It's typically the ones that it's easier to get more interested in some of these ones when someone actually really takes the time to write some of those articles, because it gives you a really great idea of what's going on, and then you can kind of dive into all the different points in those articles and kind of pick them apart and then see what you actually agree with and don't. But no, that was what, initially got me interested. So
Yeah. And I know he on one of his tweets in that same period, I know that he added, I have the chart up here. I know that he added pretty much here at the bottom in April. And he said in his wording was like, I added substantially around 120 to 30, 126 to 130. Which he has gotten a nice gain. I don't know if he's ever sold that off, but since then it went up to almost $5, and then came Q3. But it started to climb directly up again till $3 again, and then since New Year, he went down to 170, and I added a little bit around there. No, sorry, I added after the report, but it was still below $2. And I think if you added around 170, you would already have a nice little gain since then. So I think the price here, unless they come with another disaster of a report, I think the price here is very cheap.
yeah, agreed.
Yeah.
So yeah, we'll see. Monday's going to be a long day.
Yeah. Yeah.
Trying to follow
Potentially a
everything here.
very long day. Yeah.
But I mean, this is another thing too. I just had pulled back up my fundamental sheet. And you look at our leverage calculator for something like BNED, like it already says to issue shares. So I don't know. I guess in the companies that that I'm involved in, usually, because they're usually so leveraged, yeah, it's not always leveraged, but usually they are. And it looks like it's dying. And it doesn't. You have to kind of expect they're going to issue shares. That's why we buy in where we do, because I'm not buying in when I think, I didn't buy BNED, when it was like a couple dollars per share. I'm buying under $1.
Yeah.
So, it just is what it is. You just have to you have to anticipate that, and that's why I think the margin of safety is so important.
Yeah. By the way, Dane, I had some questions on Thursday about the actual calculation for for your valuation.
Yeah.
And I went through it roughly because I know what you do, but I don't see. I think it was the Value Hunter. Is that his name that asked the question? And I don't see him in the chat today, but if he shows up, maybe we can go through the actual calculation for the valuation that we have.
Yeah, I can go over it because it's you know, it's not like a foolproof thing either. Like I don't want people to think that it's, you know, gonna be the end all, you know, in terms it's really just a way to kind of adjust your metrics when a company really is leveraged to just make sure you're taking it into account. And it's more of an art than a science by all means. Um, you know, RK talks about it when you know when he built it, and I'm not sure if mine's exactly built the same as RK. I imagine it's very close, just because of, you know, I got my numbers almost identical to his when I after I had built it.
Yeah.
But and I did it over like a few different companies to make sure that it was the same, didn't matter which company. And actually mine was set up better than his. Not saying his was any worse. He just hadn't found a way that if you wanted to set it back to 0 that you could. So I had put a few more adjustments in there to make sure that it calculated it. And I also I discount more heavily than he did.
Yeah.
If I remember right, he says it's a 25 discount or a 25% discount to the current share price when they issue shares. And I make it like a 40% discount because I think if you're going to do an equity offering, it could substantially dilute shares. So I put like 40% on it because I want to know, you know, what would be a really, really ugly dilution. You know, how would you survive at that price? So that's how mine calculates it.
Yeah. And it's connected to the calculator, right?
Yeah, it's connected to my calculator, which then is connected to all the 3 and 7 year averages for most of my stuff, and then it
Yeah.
dilutes those share numbers, or I guess it inflates those share numbers usually.
Yeah.
So it's taking into account that. So you know, in some of my valuations that I calculate, you can kind of come to a conclusion on what that actually is going to do to the value of the stock. And like I said, it's not foolproof, but it still surprises me. You know, I pull up so many stocks that are right in the wheelhouse of where I would say fair value is. And usually, like I said, the companies I'm looking at are a little ugly or are struggling at least. So just on that alone, um, you know, they usually are coming in at a discount, you know, and I'm trying to buy, and you know, I'm just looking for a point of inflection. You know, that's typically what I'm looking for when I invest in something is, you know, I find a business that looks cheap on a few different, you know, metrics essentially. And you know, and then from there trying to figure out, you know, why is it so cheap, and what are other people thinking. I mean, this isn't anything new. This is what RK said. So you know, it's like I said, I'm, you know, we're adopting somewhat his similar strategy. We go about it in different ways, but it's the same principles still apply.
Yeah. Yeah. So let's see if he shows up and we can like. You went through it quickly now, but maybe you have some more questions. You know.
Who's that RK you're saying?
Yeah, I bet he has tons of questions to us.
Yeah, well, he could point things out, some things out to probably the spreadsheets for us.
Yeah.
I wish I could have had that initially when I was building these stupid things.
Yeah. Yeah, for sure. Okay, I'm in my fundamental one. I pull up IMMR. Have you seen them before?
I believe so. I just want to pull it up just so I can figure out exactly.
And by the
where
way,
I'm
I
at.
had some issues again on Thursday with my sheet. I have managed to fix it somewhat, but it's still not exactly perfect because Market Watch was blocking me to pull things out from them all of a sudden. So I had to change the way I did it, and I managed to do it with most of the companies, but sometimes you will see some blank fields here and there. And I see my short information right now, it doesn't work like I want. So there's a few things not working in my sheet today. And I also noticed before the stream that the WEYS sheets is extremely slow today. So if I pull up some tickers, you might have to wait a little bit, just so you know.
Gotcha. No, it's all good. Yeah, we can go through the ones that you already got pulled up anyways. But yeah,
Yeah.
I have looked at Immersion Corporation now that I'm looking at them again.
Yeah. I saw
Did
they
you
were
wanna?
up on an earnings beat, I think.
Yeah, actually, I'm gonna check my database. See when I can't remember the last time I looked at them was. Oh, it's been a while. So the end of 2022, I looked at these guys. So it's been a
Yeah.
long time.
And I saw in the let's see here. I think there was a lawsuit or something with the Meta that is now resolved. It's a little bit ago in February, but it seems that it has gone through some hurdles and are now through them, you know. And I saw Prati Management in the comment section, and that's someone that I have on my list that I follow at least.
Gotcha.
But what do you see on the fundamentals? I see they have some cash. It shows up as safe in my sheet, and they
Yeah,
have
I got
bought
to see if
back.
they don't have any debt. So
Yeah, I see that they have bought back a little bit of share recently, but revenue is down. But I see
yeah, but
that they have.
historically, the past few years, revenues have kind of been around this area. I mean, if you look
Yeah,
at margins, margins look pretty good.
yeah. That
Did they just start paying that dividend, or is that?
I have it as recently. Yes.
Yeah, so you can tack that on.
Yeah. I was hoping to see a little bit more of a cash generation here. What do you have? It seems like they generate a lot of free cash flow compared to their operating cash flow in my sheet.
I actually have their free cash flow the same, so I
Yeah,
have to check the CapEx number because mine's not charging like barely anything for CapEx.
but I have the same, so it might be accurate.
Oh, you're saying okay, sorry, I thought you were saying that it was different.
No, I just saw it and I got a bit unsure if it was correct. You know.
Yeah, no, mine says the same thing. So, while you're doing that, I'll pull up the SEC site or yeah, SEC and see what the actual report says.
Yeah. And I see earnings are positive the last 3 years and a lot up in 23 compared to the other 2 years. And they had an acquisition in 22. You know that maybe they bought with some of the cash they have on hand there. But they did raise the share count a little bit from 21 to 22. But it's back down now.
Yeah.
But I think maybe that acquisition, you saw the margins are a little bit improved. So maybe that's a good acquisition. I don't know. I haven't checked it out yet. What did you have in your comments from last time you saw them?
Like I said, this is a while ago.
Yeah.
So, I said the same kind of things. At the time there was an insider buy. I thought it was just a little too expensive, which
Yeah.
last time I ranked it and I said it could be worth 880, but that was a while ago. So let me just see, because like I said, that was back at the end of 2022, and it's kind of gotten down since there. And I said back then fair value, or like not fair value, but a value what I'd be interested around was like 430.
Yeah.
So that's pretty much where it kind of bottomed out, actually. So that wasn't even a bad guess per se. And then it did get back up to $8. So for that time frame, that probably wasn't too unrealistic. Although right now
No.
I have it a little bit more negative. If I was to look right now, I'm just trying to go through these numbers real quick. I have it worth about 550 right now on a pretty conservative valuation.
Yeah.
So it's a little expensive for me right here, but
I agree. With the numbers I see on the fundamentals, even with their cash though, I like that if you look at historically also, they've always had cash and no debt. So it seems, but if you look at also the equity growth, I like the way they are growing a little bit, you know, but I don't see the same growth in revenue in that same time. So I would have to dig in to see like the outlook and the predictions on that. But I agree that it's too expensive here. I would want it probably almost cut in half before it would be a potential buy, you know.
yeah, and you know, it does come up kind of cheap just on the fact that you know they don't have any debt. So
Yeah. But it's going to be interesting to follow them to see if they're going to keep paying that dividend now.
yeah, now and wasn't there something with them in Meta that I remember
Yeah.
seeing?
But they said in the comments that they have settled. There was a lawsuit, I think, but that they have settled.
Oh, and they settled it. Okay.
And that's where this Prati management guy comes in. And the author is just replying to him that I suppose it was because they have reached an agreement with Meta.
Gotcha.
And then a bit further down, but this is all recent. It's in 2024. So the Meta lawsuit has been settled. Check out document number 148 advising the court of an agreement in principle that is now being prepared. So there was something with them. I don't know what.
Yeah, and they're saying that it could be worth a current takeover price, but at a current takeover target at this price, which is all well and good. But the only issue there then is it's at this price, so there's no. I don't really
Yeah.
see a ton of upside right there. But
No.
you know, if they're starting to do buybacks and they're giving dividends back out, I mean, it looks good.
Yeah, and if they can keep
I'd
the
say the business
equity
is really
growth
decent.
up, but I would like to see a bit more cash generation here. But maybe you will get that if you just track them. But I think I will leave them out of my tracker just now because it's a bit too far away for it to be cheap enough. I think.
Yeah, I have it on deck just due to the fact that you know book value keeps improving. You know, and it has a historically good cash flow generation. I mean, it's not perfect, but in general, it's usually pretty positive. If you look at the average over the past 10 years, it's been positive.
Yeah.
So just all those things kind of included.
Yeah.
Is there anyone that owns this that you saw?
I can check here.
I don't see
Royce,
anybody with
they
them.
own everything.
Yeah, I was gonna say I just don't see anyone with like a decent size position with it.
No, me neither.
So
And like you said, with the thing that caught your eye last time was an insider buy. There hasn't been anything in 2023. So there's been
yeah,
a
I don't
while
have
since
anything
they have
now
bought.
for
Huh?
yeah. So I said yeah, I don't have anything like mine doesn't pull up anything for insiders now. So
No.
that's old.
So a bit like I saw on the chart also, it has been trading sideways for a little bit up and down, of course. But yeah, I would have it's fairly close to 52-week low here, but I would need it to break below the 52-week low and get even more cheap than $6, which is the 52-week low.
Right.
By the way, Dane, I see
what
we
you got?
have Max in the chat. Good evening, he says.
Hey, what's up, Max? Good evening.
How do you evaluate what a company is worth? For example, you say that IMMR worth about $5. So a similar question to the evaluation then.
You want to take this one, or you want me to?
Yeah, I went through it a little bit on Thursday, but I can go through it again, and you can just jump in with some comment as well, Dane. But
Yeah.
basically, there's multiple things we are looking at, and we use these averages, right? The 3-year and the 7-year average, and we kind of try to add them together and take an average of that, and then we calculate the book value and the operating cash flow, and try to average it out to see come with a valuation for it. But this calculator that we have here, in this case, it doesn't matter so much because it's safe. But the calculator issues shares when it's levered to dilute the numbers a bit, to be a bit more conservative. And in my sheet, I haven't been able to get my book value diluted with the calculator. That's something I need to work on. But I know Dane has that. So mine, because I have a valuation calculator here, but I don't trust it because of it takes the original book value and not the diluted one. So it always comes in a bit high. But then what I tend to do sometimes is just like I look at the averages and try to figure out like conservative numbers, and I just do like 10 times that, and then I get some support on the chart, and I just look at a few things, and also I look at earnings sometimes also. So it's not exact by any means, Max. But it's something that it's more like to see when it's cheap, you know, not potential, not always to see what it can go up to, but more to see what the downside is. That's at least what I do, Dane.
Yeah, and Johnny, by the way, I can already think of a quick way I can adjust your book value if you want that for your valuation.
Yeah.
I can show you. I can already think of a quick way, because what you would do is just for your valuation calculator, you just take the book value and whatever the share dilution is, just multiply that by the percent of whatever your book value is currently and add that in to your valuation.
Okay.
Instead of taking
Yeah,
the
and then
current
I
book
can get
value,
a
you could
diluted
just,
number.
yes, that would be an easy way to do it without like redoing your whole thing. You could just do it for your valuation. You wouldn't get to see what the diluted book value is like separately, but it doesn't
No.
really matter, to be honest.
No.
But yeah, Max, so to like, I don't know how in depth you want me to go, but you know, the value of a stock is, you know, it's discounted future cash flows, which there's a lot that goes into that, Max. So like if you're trying to calculate things, like if you want to be a real value investor, there's all these different ways that you should discount something, and there's all these things that you need to take into account to come to a share price. So just to give you some basic ideas of like the kind of thing you should be thinking when you're trying to do this is, obviously, once you take assets and you subtract out your liabilities, whatever's left over is for equity. So you can just take that basic number right there, which is your book value essentially, and divide that by shares. Now, there's a lot more that goes into it than that, because the liabilities have long-term effects. There's obviously growth that can be involved in these things, so these numbers are going to change. And then how to calculate what that growth is, that's typically why we say we use operating free cash flow. Um, I try not to use simple free cash flow, which I know a lot of people do, but sometimes, you know, if I'm just trying to determine if something's cheap or where I would be interested in a buy, what I'm trying to do is I'm trying to eliminate one-off things. So for instance, if CapEx for let's say we're looking at like an oil company, you know, CapEx is going to be high during years when they're going to have better future free cash flow, because you're spending that capital expenditure up front to build out and you know, increase your wells or drills or whatever the heck you're doing. So your CapEx is going to make it look more negative in years, which if you're trying to calculate that, like, you know, you can see how we divide everything by share count, and then it depends on your time frame too. So, you know, if I'm thinking of holding something for a few years, I'm trying to calculate what the price should be in a few years, essentially. Like if you're like a Buffett style investor and you're looking at these companies that have been around for forever, when you're calculating something like this, you try and calculate maybe like the next few years with relatively accuracy. And then, you know, you do a calculation like into like, you know, perpetuity essentially, where you would just say that, you know, the company is going to continue to grow at this 5% rate for the rest of its life over, like if, let's say it's a company that's growing, you would argue that, let's say that, the company based on book value and its current free cash flow, and you can do if a company pays a dividend, that's a way to do valuation. Um, and I will immediately point you to like Demorton stuff. If you really want to learn how to evaluate something, I mean, any finance course that's really truly about, stock investing or something along those lines, it's about valuation. It's about how to determine, if you think at a base, how do you determine what a bond's worth? A bond's worth its coupon rate, plus whatever is returned to you. That's the actual price of what it is. That's the yield that you get. So it's the same idea. If you're going to try and calculate a stock, you try to value it in the same level. So let's say 5 years from now, a stock's worth $10 today, and I think it's going to be worth $10 in 5 years, but I think it's going to pay $1 in dividends, then that would mean I get a 20% yearly return. So that's like the way you would look at it. So that stock then would be worth, in my opinion, 20 cents a year because, based on whatever the valuation is today, because you're going to keep getting 20 cents. Now, I know I'm saying that the stock stayed at $10, but I'm just saying if you're going to compare it to a bond, that's how you want to value equity. Now, you also have to take into account. So, I was talking growth. Well, if a company is shrinking, like if we're looking at a really leveraged company, that's why we built this leverage calculator. Because what we're trying to do is we're trying to say, well, okay, say this gets really ugly and they need to get this company to turn around. And in order to do that, they need to get their interest payments down and they need to start generating free cash flow to a certain extent that this business becomes profitable so it won't die. Well, what would you have to do to dilute shareholders? And we discount that at a rate to whatever the current price is. I think mine's around 40%. I discount mine. So because think about it, if let's say like with this company here, you got 30 or how many shares is this? 33 million.
33.
If you wanted to say this was it wasn't a safe company according to our calculator. Let's say they were really leveraged. I might have to dilute that 2 or 3 times. So if I had to issue another 33 million shares, well, what is that going to do to your stock price? So that might put you in a better position, but because it's going to dilute you by 33 million, well, if all our metrics are based on per share, whatever my operating cash flow has been, like here it says for a 7-year average, it's 25 cents. Well, that would mean it's only 12 cents then. So if I'm talking 2 or 3 years out and I'm only going to add 12 cents per year, and obviously it's not like that money comes right back to you. Diluting always means giving more equity out. Dilution is for shareholders, not for debt holders. Debt holders, I mean, it's not like you can dilute debt holders because you're always going. You should basically get your money back in a. If you're buying debt, you should be able to get your principal back with debt because if a company goes bankrupt, you're the first ones to get your money back. So you shouldn't have to worry so much. I mean, some people go really high yield, high risk bonds, like really, really junk bonds. But typically, if you're investing in bonds, like the reason you invest in bonds is because you want like a steady, guaranteed return. So you can mix in junk bond. I guess it's whatever you want to increase your return. But if you're going to shoot for risk, that's why I look at stocks like this. I guess it depends on your time frame. If you wanted to increase a little bit of risk or just have a more balanced portfolio, um, you could add in some junk bonds with your regular bonds. And when I say junk bonds, I just mean stuff that's rated low. So like, S&P and, some of these other like Moody's, when they rate bonds, if they rate you a lower, more risky bond, well, then your yield should be appropriately higher because your bond, because it's riskier, your company's riskier, there could possibly be a potential, which is why initially RK, when he was doing all his videos, he would go in and look at bonds. If there's any notes that are rated or you can see what the most recent price, because usually they're on par with $100. So when a bond's sold, it's worth $100. And if it's yielding 10%, let's say the bond goes down to $90. Well, then I think it should yield it should yield an extra 10%, I think it is, or whatever the difference would be, 5%, in the other direction, because you should be, accounted for that because the price goes down. So the yield goes up directly inversely. So, what I was saying about RK is that, he would just go in there simply and look. And if bonds are still trading at a price that he found reasonable, that would mean to him that, if the bondholders are still in there, that there's a chance, because if the bondholders aren't in it, like I said, they're the first to get their money back. So if bondholders aren't interested in it, then as a shareholder, you better get out of that company, because you are definitely not going to get your money back if it goes bankrupt. So, one way to think of it too is, in terms of valuation, is, you can look at like liquidation values as like the lowest thing. So if you were going to go into bankruptcy, if you were going to take all the assets that you had and discount them, because obviously when you sell stuff, you're not going to get all your money back. So, and this is what like security analysis and, Ben Graham and all them guys go into. Like, let's say you had 50 million in cash and like 10 million in securities, and you sold those off and you got your 60 million there, and then you sold all your land and property and you were able to get like another 10 million for that, even though let's say on your balance sheet it said it was worth 30 million. You probably won't get all that, because in a fire sale you're just trying to sell stuff off. If your debt is less than that, then you'll have money left over for shareholders. So that would mean shareholders in bankruptcy would get some money back, which is why you hear of like net nets, which is like when, if a company is trading below its net and of its working capital, essentially, then, there's a good chance as a shareholder you'll get your money back. And when something's trading that low, which you don't really see anymore because everyone knows to look for those kind of things, you can get your money back, and it means a company is super cheap, because it's like going to say to you like, this car is worth $10,000 and I'm selling it for $5,000. Do you want to buy it? And it's, yes, I want to buy it because it's worth 5,000 more than that. And then it's how can you sell it to make sure you get that $10,000. But it's a mix of all those kind of things when you're trying to calculate your valuation. And that's why what I do is I'm simply kind of taking book value and taking the dividend if they pay one, taking the free cash flow and adjusting that based on, if I need to dilute or not for the next few years, and just adding that together based on the share count, which just gives me kind of a rounded number to go off of. And I'll adjust that number. If I think the business is improving, like with BNED, for instance, I think the company's turning around. So, my valuation, I think for BNED came up with 70 cents, which I guess you could argue right now is probably not a terrible price to shoot for. But, I want a discount to that. If I'm saying it's worth 70 cents, if I'm shooting for a 50% return, then I want 50 cents, or I want 50% off of whatever that 75 is. So I want that at 1.5 times whatever my valuation I came up with. So I don't know. There's so much that goes into it, and to be honest, it doesn't all really matter all that much. This is a really long meandering way of saying that, like, you can get into this really nitty gritty valuation, but it doesn't really matter. You just want to find a ballpark figure that
Yeah.
when I'm saying something's worth about 550, that's just based on some simple math that I did. Like I said, which usually has to do with both book value, tangible book value, operating cash flow, dividends, free cash flow. I don't really necessarily look at earnings per se, because earnings can be extremely deceiving, because in earnings you have to take into account investing um, and financing. So, for instance, I could make my earnings look good because I took on a ton of debt. Was that beneficial to the business though? No. So I don't want to. I'm not saying that they didn't generate cash and that cash doesn't exist, but if they're going to plow that into the business to try and grow it, that's not going to come back to you necessarily as a shareholder. So you might be able to calculate that in the future or try to, but all these things, it's like you don't know. They're all unknowns. You're trying to calculate into the future what something's worth based on historical data that's subject to change. So to kind of what Johnny was saying, all we're doing is I'm trying to find like a low ballpark figure on what I think this could be worth in its current situation, and maybe over the next year or two. And from there, I want it at a substantial discount even to that number. And then that allows me to feel comfortable when I'm getting into something without feeling like I bought in super high or anything like that. And then, if the thesis is turning around, or they're doing some kind of asset sale or something like that, if it's already in the valuation area I'm finding interesting, like let's say I thought something's worth a dollar, so if it's worth a dollar to me, I want to buy it around 65 cents, as long as it doesn't drop much below 65 cents. And that's where I start to get in on. And that's why I said it's important to trunch into these things. If it starts to drop too much more than that, you get out of it. Maybe you're wrong. Maybe it wasn't going to turn around, or maybe your valuation was a little still too high, which is okay. But then if it does turn around and it gets back up to that dollar, well, right there's 50% returns. So it's all how you want to balance it out. But um, Yeah, I don't know if you want to ask any questions to what I just said, 'cause I know that was a lot, but I don't know.
No, but
There's a lot, and you know, you're kind of always adjusting the way you think of it, but um, you know, the valuation matters, but that's why I said too, like the narrative matters. If it's a momentum stock, you know, you might get those guys coming in. If there's a lot of short interest, that matters because they're going to depress the stock, and you have to take that into consideration.
yeah,
Um, you know, if there's growth investors involved, they're not going to focus on so much all that. They're trying to project out what it's going to do 10 years from now or whatnot. So I don't know. There's just a lot that you can take into valuation. And I don't think there's a right or wrong way to go about it. But the most important thing is trying to find, in my opinion, is trying to find that margin of safety where you're getting in at some kind of low valuation. And you can argue that's even what technical analysts did. You know, technical analysts, they're just using a chart, but they're still trying to time bottoms and get out before the top. You know what I mean? Like that's what they're doing. And that's still a form of valuation, even if you're just looking at a chart.
yeah. I think he's saying, "Wow, thank you for that long answer. I didn't understand everything, but I will rewatch." Yeah, good.
Yeah, like I said, there's a
I'm
lot. I just said a lot,
no, but I
but that's
think
how I
it's
try and think of
also
these things.
and Max and everyone else. I have spoken with Dane a lot about this as well. It is complicated, but I think it's important. And I just want to add also. I don't remember if you mentioned it, Dane, but when the calculator show that something is levered, it's important to check what that leverage is as well, because sometimes it's leases, and then we adjust the numbers a bit, you know. So it's
Yes,
important to know
and
what the debt is as well, and then that's when you go into the SEC reports and stuff like that. But I just want to say that I think it's important to keep in mind that there are other things we look at other than the valuation as well. It's more to us that it's something that triggers us to pay attention. Okay, now this has dropped to a level where we found it roughly interesting the first time we looked at it, and then we need to pull it up and do research on it again. It's not necessarily like okay, now we have to buy it or anything like that. It's more like a small alert to see that okay, there's been some development here now that makes it a bit more interesting than maybe it was at the first time we looked at it. So and like Roaring Kitty, there are other factors, and not just valuation, that can make us pull the trigger to buy something.
yeah, and like another point that you know I'd like to bring up is so you know when Johnny's talking about you know we're looking at what that debt is and you know that's why you'll see me constantly look at maturity dates because if let's say they have a lot of debt but it's not due till 2026, well then if I'm trying to figure out what it's going to do until 2026 and if they're going to be able to make it at that period, I'm going to try and calculate all my stuff up until 2026 because that's when that next debt is going to come due and I have to make sure that they can handle it during that time period. So you know, I'll take all that into consideration. And if there's like a turnaround story or something and I don't think they can get it within that time, well then, you know, the whole valuation kind of gets thrown off because nothing matters if you go into bankruptcy. You know, it all gets thrown out. So, you know, your valuation, you can sit there and play with numbers all day. But that's also why, you know, I see some of these guys and they're, you know, someone, I can't remember what it was. I think it was Courage's article with BNED at some point. Someone was talking to him about the balance sheet and he kept getting like so annoyed. He kept just saying like, I know how to read a balance sheet. Thank you.
Yeah,
And the guy kept pointing out like the most recent balance sheet. And I don't think he understood that what he was saying is like, yeah, we get it. We're value investors and we're looking at the balance sheet. But at the same time, you have to look a little bit out into the future and you have to just put a little bit more nuance into it because if you understand the business, you should be able to like with FTC, you see what that's slowly doing to their free cash flow. It's slowly increasing. Revenues are slowly increasing. You know, they're almost positive again on their earnings and all that stuff. So, um, you know, you have to take that into consideration. Where if I'm trying to plan on can they get out of this, what would they need? What would they need to get those earnings positive to make it through this debt? In the future become profitable, you have to take all that into consideration. And if you're not doing that, then you can sit there and say, well, the balance sheet looks like shit today. Yeah, I know it looks like shit today. I'm trying to figure out what they can do. And that's what management's job's doing too. So as an investor, you have to look a little bit forward. You can't just always look in hindsight. And anybody who tells you like, well, the balance sheet today looks bad, and that's just lazy investing to me. Because if you can't understand the business enough to look out a little bit, I don't think you should be investing that anyways if you're only looking at the numbers. Just to look at the numbers is a really shallow interpretation of the business.
Yeah. No, there's this is complicated stuff, and this is also an issue like I think every investor is struggling with. What's fair valuation? When is it cheap? When is it not? And it is important, but after you have gone through that process, it's about the story. It's about the insiders. You can even I usually go into the chart and see if the chart agrees with my thinking, and if there's like double bottoms and stuff like that, if it's close to 52-week low and it's close to breaking even more below, then I might have to wait to see if my the valuation I set will be maybe even lower than what I initially thought, so there's a lot of adjustments also in it, but the actual calculator is like the book value and the cash generation, simply put, and then the calculator takes in the leverage into consideration. But yeah, just continue to ask questions about these types of things. We will try to explain the best we can. I think Dane did a very good job now. I'm struggling a bit more with that when I need to explain in English, but just continue and we will try. Yeah.
Yeah, and it takes time just to kind of conceptualize all this stuff. So it just takes like kind of going through one thing at a time and slowly building out the ideas in your head on how this stuff works. And like another thing too is I'll slightly adjust my numbers too. I take into account 52-week highs and lows. I take into account foreign risk. One of the ways I take into account foreign risk, because you technically are supposed to calculate risk-free premiums for different countries and political risk, all these things. And for instance, like, I call it like, like right now we call it like the China discount, right? So there's all these stocks in China that trade at this discount to, if it was an American company, how you would value it. So for me, a simple way of doing that is, let's say I look at 3 Chinese companies, and whatever my valuation calculator is, let's say on average, it's, the Chinese company tends to be at like a 30% discount to whatever I evaluate. Well, now I'm going to adjust all my stuff by 30% because, according to the markets and what the risk-free rates are, you have to take into this discount that the rest of the market's kind of pricing in right now. Now, don't get me wrong, that's subject to change, and obviously that number is just what the market is saying right now. Whether it's right or not doesn't really matter. And you can just still buy on something if you think it's cheap, but because of that risk that's there, it makes it a little bit harder for me to invest because I'm not quite as sure with my numbers. Like I said, it doesn't take long for something just to get stupidly cheap, and as long as you think you can trust the auditing reports and whatnot, then it might be a good buy. But it's all these little things you just have to take into consideration before you buy something, or you should. And the more you learn, the harder it becomes to buy stuff. I find, because I just know more. And where back in the day, I would be more quickly like blindly to essentially buy something. Nowadays, I'm like, I can't buy this unless I know like a relatively good amount of it. Like I have to have all these questions kind of answered in my head before I can hop into something.
Yeah. And another thing in terms of this that I don't think we have mentioned is that when you have gone through all this, because I think it's important to do this process yourself first, but you see us often going to Seeking Alpha to see if anyone is bringing us something that we haven't considered. And then if you learn something new there, you have to take that into consideration as well. And maybe some people are doing great math there and calculations to come with a valuation that is somewhat close to what you saw, something like that. But they have a point that you have thought different about, or that you missed altogether. It can be beneficial also after you have gone through the valuation process to see what other people are seeing, and sometimes you see the same stuff.
Yeah, that's a great point. Because
And
I
that's
definitely
also
I
why
definitely
it's,
see what other people do.
yeah, and that's also, I think it's equally important to track people on a website like Seeking Alpha that you have tracked for some time, that you know have a good track record, and also do the same with fonts and stuff like that. So yeah, it's not simple.
But it also, and the other thing too, is it kind of gives you a good idea of where you're at as an investor, because the more and more I read and the more you learn what other people are saying, like I can quickly read through something and realize like how shallow their interpretation of everything is. And if I'm like, oh, you didn't really go through all that much, or I feel like you're missing like the whole point of what's going on here. If you just simply call some stuff off like a balance sheet and you're like, well, this number is not great and this doesn't look great and this has been trending down, if that's all you say and you say nothing about the business or nothing about what could change or why those numbers even are the way they are, at this point, like I'm honestly just going to probably pass over what you say, because that's not enough these days. Like I want to know someone who's put a little bit more effort into it, to make that kind of decision. And that's
Yeah,
kind of why I throw a lot of stuff on deck, because once it starts to get cheaper to where I'm more interested based on my rough valuation, that kind of allows me to hone in on a few stocks as opposed to the thousands that are out there. And then from there, same thing, as I start to find like more interesting stories and whatnot, I'll move it more onto my watch list, especially if it starts to get really cheap. And then from there, you just keep digging in until you start to build confidence and how well you really know that business and what's going on with it essentially. And then from there on, you start to take positions off that. And then the big part from there is all portfolio management. How big are your positions? What's your risk tolerance in terms of how much you're willing to lose? What are you trying to hit for your returns? How well do you know the business? Do you know when you should be selling out, or are you not sure? There's a lot of little parts, but all of it has to be, the better you understand all those little pieces, the better the investor you're going to become. Anybody who tells you investing is easy has no idea what they're talking about. You really need to focus on all these little factors, and the more you do it, it's just like experience. It just comes with the experience. And that's
yeah.
why, I'm always reading, I'm always watching videos. I constantly looking up like terms and stuff I don't think I fully understand, just to make sure that when I'm looking at something, I'm as confident as I can be that I understand what I'm thinking.
And that's where RK talked about his decisions is based on feel sometimes. That is experience, right?
Yeah, yeah. I mean, you could argue that the feel is experience, because
Yeah.
it's probably one and the same.
And also keep in mind that my point about Seeking Alpha as well, like people on there has direct access, not direct access, but they have access to management in a lot of the companies they deal with. So they have valuable information and insight that people like you and I, we are missing that connection. So I know a
Yeah,
lot
I
of
mean, you can go.
yeah, I've seen some people are like talking how bad Seeking Alpha is, and that it's flooded with just bad reports, and it is at times, like you said, it's a bit simple and stuff like that. But Seeking Alpha is very valuable. I've found a lot of good information there. So yeah,
That's why the comments, I find, like half the time the comments on Seeking article or Seeking Alpha are more important, because if someone writes kind of a shallow article, if someone's following that company in the comments, they're going to kind of rip you apart. So it's good. It's good. For all the faults these things have, same with like Twitter or X. There's a lot of nonsense going on, but you can find some really good analysis too. Same with Reddit or StockTwits, like all these things. There's different avenues you can go down to find these things, and eventually you just start to kind of follow the people that just do good analysis. Whether they're right or wrong doesn't necessarily matter. But when people put together forward good analysis, I'm going to start to follow you, because it's every once in a while you're going to be right, and I want to know what you have to think about these things.
yeah. And it's easy to spot eventually, and also if you see them defend counter arguments in the comments in a way that you also like. It's like maybe you find something new, a new person that has written a good article and is also defending the points in the comments. Then it's like, okay, that's pretty solid, you know.
Yeah, I thought about that in the Department of Education hearing recently. What was the guy that we said that we thought brought up really good points that last time? Was it Scott?
Scott, I love
Yeah,
Scott.
so Scott brought up some great points, and Greg Martin, who's the one who's like heading those hearings, just started like basically fumbling over his words and didn't really have like a good response back to him, and he got kind of angry with him.
Yeah, he
And
got angry.
when you're trying to like defend a point, if someone says a bunch of very logical facts to you and your only response to it is basically anger and, like the fact that you're just not going to do what that person says and you're angry with them, what that tells me is you don't know what you're talking about and that person's most likely right.
Yeah,
So after seeing that, that as soon as I saw that Scott go through his first little speech, I was like, there's no way this is going to consensus because he just made Greg sound like an idiot.
yeah,
And no offense to Greg, I know you're watching. So, no offense, but like, if someone calls you out on that and you're not kind of calm and cool and have like a reasonable response to it that kind of defends your position, well, then I start to know that, like, I don't really think you do know what you're talking about. And, everybody that's the other thing about investing is everybody has something to win. And I think that's why Johnny and I try and put our disclaimers on here because, yeah, I have a lot to win with BNED, which is why I'm trying to explain to you guys as fairly as I possibly can what my thought process is on it and why I think it's still going to succeed. And if it doesn't, I don't want you to be surprised if I'm wrong. I just want you to know that, I gave it everything I could to try and determine what was going to happen. And, I just hope that it turns out that I'm right. And that's all investing is. And no matter what, even if you're super right, who knows? Maybe it'll work out. Maybe it won't work out. And in hindsight, you can sit there and probably go through 100 different little facts that would have determined, change things at one point. But it doesn't matter because sometimes the market just doesn't care what you think, and it's gonna make you wrong. On Monday there could be a million investors that come out and just short the shit out of the company and drive it into the ground. And there's nothing I could do about that. Like that's just what it is. That's the market just telling me that it sucks to be you, which
yeah,
it is what it is. And
yeah,
when you take concentrated positions, this is why Johnny said stop losses are important. And we have said that we've taken our stop losses on here, but don't get me wrong. If this really started to plummet at some point, like you got to know when to call it quits and you got to know when to take your losses. It is what it is, but it's just everybody has something to win too. So if you have someone out there telling you some story about their side, just know that it's most likely biased. And people have some reason to win on these things or want you to think certain ways. So that's why we always say do your own due diligence because you might find after you do your own that someone sounded really good, but after you've done your own research, you still really disagree with them. So, I hope there's people out there that after they hear us talk about BNED, they disagree with us and they're like, no, these two idiots don't know what they're talking about, which, that's part of why we called the stream laughing stock because, there's times we're going to be wrong and you just have to kind of accept it.
yeah. And that's how it is. And like we have talked about this before, you must be allowed to be wrong. Also, it's like I haven't seen anyone who is never wrong about anything. So that's part of it, and it's just how it is. I think it's very easy to come after something happens and try to explain to everyone how you were thinking before and you didn't hear from them before. But it is like this a bit, and it's all good. It's just interesting to see, but yeah, Dane, should we move to, should we move to the next ticker?
Yeah, Max, no more questions. Okay. You make us go on tangents here.
I'm not sure if there's a mute button on in OBS.
Yeah, hopefully that wasn't muted for the whole thing.
Yeah. Now, do you have the tickers pull up on your end?
What's the next one? I don't, but it only takes a second for it to load.
Yeah. WEYS, like WEYS.
Waco Group?
Yeah, Waco.
All right, yeah, it's pulling up now.
Yeah.
Yeah, that's one good thing about the share rare, the way it works. It's already in. So I think that took 5 seconds.
Yeah.
Assuming my spreadsheets are working properly.
Yeah.
It's a big assumption there.
I saw them before the stream. It also shows up as safe in my sheet, but I thought I should keep them for the stream, Dane, because I have a really good 2023 for them and not so good the years before. But what do you have?
I mean, it's a lot of green, just
Yeah.
looking quickly. So that looks good.
Yeah.
Just peeking through.
And I think they have improved the margins a lot.
Yeah, I mean, right now, this year looks good. It looks a little, just quickly, talking about valuation, it looks a little expensive for me, but
Yeah, it does.
they have really low debt. I'm almost assuming that's just like operating type expense things, or maybe it doesn't look like real debt.
No.
Book value looks great. They're paying an excellent dividend. I mean, at least stable is what I should say when I say excellent.
Yeah, they've been paying that for a while also, and positive earnings for the last 3 years.
Yeah, the one thing that I just look a little confused on is it's strange to me that cash flow is like $2. So this is just my numbers. 2020 I got like 2, then 441, then negative 473, now positive 7890 or 789, which is another point, Max, kind of why we're saying we use averages. So like I'm gonna look at my 7-year average here because it helps to kind of smooth all that out because I got 1 year at negative almost $5 per share in terms of cash flow, and now I got almost positive $8. So it's all over the place.
Yeah.
But no, it looks good. I mean, it looks definitely this year. Whatever's going on right now looks good.
Yeah, and there's a big inside ownership percentage, around 40%.
Did they just have earnings? Because I noticed the chart really dropped off the past few days.
Yeah, which is probably, I think I pulled these up from my weekly movers. It doesn't say if they...
Revenue it said was minus 18.6% year to year, but it doesn't say what the EPS was
Estimate.
assumed. Maybe there wasn't anyone looking because it doesn't say whether they beat or missed.
No, I get the same here.
So I don't know if
But
there's an analyst watching this. I would be surprised though if there wasn't. What's the market cap? Oh, 272. It's not that small. I mean, that's not that small.
No, it's not that small. But I mean, it still trades fairly high compared to the last year. But it never got that low either. And if you pull up the chart, it has these spikes up and down every now and then. But of course, a big drop now. The last week.
Yeah, and this is another thing too. Like, just like what we were talking about, Max. Like, you can see that a company like this does sell off at times, but it's hard to say that it ever gets super cheap. So that's the other style, like the Warren Buffett style of investing is, he probably doesn't look for quite a substantial discount like we do. But if you're buying into a company that's improving and just a good company over time, if you're holding it for a long time, the stock's going to continue to go up. So I mean, Buffett's a little different because he only can look at the top probably 100 companies out there because he's so big, and just try and pick from those. But
I just noticed also that 2023 is their first year in quite some time that they have excess cash and not the debt,
Yeah, I mean, they have like a great net to working capital per share.
Yeah. Have you been to one of these stores?
I don't think so, but I mean, I don't go out all that often. But I was just thinking, I want to go to their website and see their actual shoes. I'm sure I know some of the shoes, but like classy men's shoes,
Oh yeah.
some outdoor type stuff too. I'm assuming they probably have some women's stuff too, but it looks like mostly men's.
I don't have access to their website because I've been recognized as an international visitor.
Yeah, you're not missing much. It's, you know, I'm
Yeah.
just looking at the, you know, it shows a bunch of guys that look real suave in nice shoes.
Yeah, no, I get into the first page, but when I want to shop, they deny me access. What the hell?
It's all right, man. Let me know what you want. I'll get you a pair.
I'm still waiting on that diamond sock, you know?
Oh, it's coming. It's still coming. Shipping, you know, it's going through the Suez Canal. It's taking a minute.
Yeah. All right.
But maybe the pirates raided it.
Huh?
I said maybe the pirates raided the boat, you know?
I think that's what happened. No, but
Gotta be careful with shipping these days.
what do you think about this so far? It's like, I think we need more years where they can show that they are turning this around. Like it's a lot of green in 23, you know, and right now for me it trades a little bit high. But I see that historically it hasn't dropped that low either. So I'm not sure if this is ever, like, it's still far away from, you know, where like $20.
Yeah, no, I agree.
But it's interesting to see that it has these historical spikes up and down. That you maybe you're gonna see another one here now that is gonna bounce back fairly quickly.
Yeah, and you know, Max too, when I'm looking at my valuation calculator for a company that's like a what I would consider like a better company like this one is, you know, it's safe, it's trending in the right direction. I'm gonna assign like a different kind of discount to it than I normally would. So where normally like my calculator now comes up with like $21.46. You know, I'll add a dividend into that so we can argue that it's worth like $23.50. And then if and like I said, you know, I'm just adding like a few years of dividends because you know the dividend number one isn't set, so I don't like to go too crazy with dividends. And all these numbers are rounded, so it's not like I'm doing any kind of like beautiful math or anything like that. But then you know, I'm not going to discount it as substantially as I normally would, just because this is doing well, and you're not going to probably be able to get this quite as cheap. So you know, if I just sign like a 30% evaluation bonus to it. Let me just see what that would be. That gives me like $31 that it could be worth on the high end, which means my interesting price would be around 21 bucks. So if you look at the chart historically, you know, it kind of got down to that area and has bounced up into the 30s. So arguably, you know, I could have timed it based on those numbers. And that's what I'm trying to, you know, that's what you're trying to do. You're trying to find a range. And no matter what, whatever your investing style is too, you're also just trying to find some way that you can continue to replicate your style. You know, whatever, however you're able to be successful, whatever it is, you're just trying to find a way to keep replicating whatever that is to keep hitting numbers. You know, for this one though, I definitely want to read through like a Seeking Alpha article because I want to see why it dropped off. Is there something that people are disappointed with in those last earnings?
There's not a
Like,
lot of
were they expecting more?
there's not a lot of comments or recent articles on this one.
Did you check Twitter?
No.
Yeah, I'm gonna check there now. And that's the other thing too. You know, we're just trying to get general consensus. Is anybody else interested? Because the other thing too is like, you know, if I'm the only person looking at this and I think I see something, I'm probably wrong because usually there should be a few people that are somewhat in agreement with you in your thesis. You know, if you're the only person that thinks a company is like doing well, I mean, maybe that will happen. But in general, I don't think I'm smart enough that I'm the only guy seeing it. That's not what's going to happen for me.
You know, there's a guy on Twitter also seeing a little bit the same that we do. He says Waco has shown up on a couple of my screens now. This is not in November though. And he's saying looks at first glance to be a slow growth microcap value play with a decent dividend. And then he's asking, does anyone here hold it? Have further analysis they would like to add? So he sees that people are not so interested as well, you know.
Yeah. So.
And I didn't find anything more than that on Twitter.
And sometimes it's nice too if you go to ownership too, you can see because it might be all I can't think of the word. Not insiders. What's like when investment firms hold it? I'm drawing a blank
Sorry.
here.
What did you say?
I said institutions. If it's all institutionally
yeah.
held, then sorry, I'm an idiot. If it's all institutionally held, then it might just keep creeping up as the business does well, because these guys will slowly just keep putting cash in. They have their own group of people that focus on these small cap type stocks, and as this one starts to do well and the numbers continue to perform decently, they're going to keep stocking some cash into it. So sometimes it might be all just kind of more institutional holders, but that's okay. I mean, it's not a bad thing, but you're probably not going to see like a big stock like price change on these kind of things. Like, institutions like to hold stuff with less, volatility, because to them that's risk. They're trying to hold stuff that has less risk, which, like I said, for the most of those guys, pretty much only measuring it on beta or volatility.
Yeah. I didn't see anyone there though. I see O'Shaughnessy, but they have so many positions, and this is like his.
Well, that's what I'm saying. Like these are big groups like Dimension, BlackRock, Vanguard, Geo. You know what I mean? Like these are all melon. Like it's not anybody who's got like a concentrated portfolio that's more of like a value style. Like these are big investment firms that they're investing in every stock out there, and it's just how big do they want to assign their position. And for these guys here, usually it's less than 0.01% for Waco.
Yeah.
So it's not like a bad thing. It's not a good thing, but it just means that like this is probably somewhat valued okay. Like, this probably isn't super cheap or anything like that. Like, for Johnny and our style, like we're gonna need this to have more of a pullback or something for us to be interested in this.
Yeah. Dane, hold on. Just give me 30 seconds. I need to check something. I'm gonna switch to the BRB screen real quick, okay?
Yeah, you're good.
All right, I'm back. Sorry about that.
No, you're fine.
Nice to see Barry though.
It's about time he tuned in.
Imagine if we see on Barry's next filing that he's in BNED.
It would be nice to have it, but I don't think so. I think it's too small. It's such a, that's the other thing too, is its market cap is so small now. So I don't know. It holds a lot of like institutional and even smaller, investment funds from looking at it. Some of the smaller guys on Seeking, it's more in our wheelhouse and our size. But
let's see. Yeah, it's a dream. All right.
He's watching. He's watching. He just doesn't want to say.
He's definitely watching. And I have a feeling RK is watching as well, They are all watching. Laughing stock.
Yeah, that's why we have so many. That's why we have so many views.
Yeah. All right. I know the next one we have talked about before. And not so long ago either, but and they are in my tracker sheet, but they are down heavy on yesterday, on Friday. And I haven't been able to check the news there yet, but it's AMPY, AMPY.
Yeah, I think I had AMPY on my watch list at one point, and either that or was close to my watch list, but I just never pulled the trigger on them, and I can't remember. I'm just going to my watch list now to see. Yeah, I have them on mine, but I'm trying to think what held me from buying. I think my thing was there just wasn't like a catalyst for them, so
Yeah.
I think they were kind of expensive at the time, and there's no catalyst to get me to do anything. So I don't know. It looks like if you look at the chart, man, it got down to almost 350 at the bottom here with whatever this news was. So if I'd been watching it closer, maybe I would have taken something at the 350 mark there, because that seems really cheap to me. I got to redo the numbers here, but I think I saw that there was a pipe leak or something they were getting blamed for.
Do you mind if I switch over to your screen on this one? Because for some reason the share count in my recent data shows up as 0, so my numbers are all twisted here.
Yeah, hang on just a sec. Yeah, and that book value is like crazy for these guys. Why is their book value so all over the place? Doesn't matter. All right. Did they do an acquisition? No. All right, it's weird. Whatever. Here, let me share my screen here with you. And
There
just
we
let me know
are.
when you can see it.
Oh, sorry. I think it's there. I think it's okay now.
Okay. And just a warning, Johnny, I probably got to get going after this one. All right.
Yeah, all good.
Yeah. Sorry. I ended up rambling a lot today instead of going through
It's
tickers.
all
But
good.
some days it's good to.
Yeah, I liked it because we have talked about that the stream is for those things as well. So okay, we didn't go through so many companies today, but there was a lot of good points about the evaluation, which is an important part of our process as well. So I think it's good.
Yeah. Oh, and I don't know. Are you able? I don't know how well you can see it, Johnny, because I'm on my laptop. So I hope this isn't like zoomed in too much for people.
Let me just check real quick here.
Because if it's really small, I
I
could probably
think
zoom
it's
in
good
a little
enough.
bit.
When we do this sharing of the screen, it gets a bit blurry, but I think it's good enough. But anyone in the
All right. Well,
comments, let us know if you can't see it.
yeah, and as I go through the numbers, guys, whatever I'm pointing to, I'll tell you what that number is, just so you're not like, what the hell is he pointing at? But yeah, so number one, first off, I just want to go to what that news was, because I know there was some kind of news with this. Yeah, so here it says. There's apparently reports of an oil sheen off the coast of Huntington Beach, California. At this time, we have no indication that the sheen is related to our operations. We will continue to cooperate with U.S. Coast Guard and other relevant authorities and provide support in any way we can. So I don't know if they had a pipe or if it was something with a boat, but something has caused the oil sheen.
They are saying, as far as we can tell, it's not a spill.
Yeah, so just still same thing on this one. This is on seeking. Investigators from California government's Office Emergency Services filed a hazardous material spill report that detailed an overflow of petroleum coming from an offshore platform that belongs to Beta Offshore. The state's report highlighted that Beta Offshore shut down the line and deployed a boat to check for the oil sheen after the spill was detected. That's obviously owned by AMPY, so that's the thing. And so, like, in this kind of thing, I guess we'll have to figure out what the damage would be and how much it would cost to fix something like this if there was a spill.
They are
But the
saying,
one thing, Sorry, what were you saying?
Yeah, they are saying a bit in the comment section. There's a guy posting a little bit more, and they are saying authorities suspect it was a one-time discharge or natural seepage of oil in the ocean, which is common as the sheen does not appear to have grown.
Yeah, and it said update by this guy. It says by Friday night, roughly 85% of the sheen, or about 85 gallons, had been recovered. According to the Coast Guard, operations were halted for the evening, but a helicopter was set to inspect the area again today. The last spill in Huntington Beach was about 25,000 gallons. So this is obviously relatively small. So this can be interesting because if this isn't from them, that means this sold off for no reason.
Yeah,
So this is an interesting pullback up. Oh, so what's the current price now?
5.15. But if you look at
Oh
the
man,
chart, it dropped way below that.
yeah, no, I just had it up. I'm just looking at a longer chart, but yeah, back to a 1 year chart here too. Actually, I want to look at intraday and see what this did.
Yeah,
So it tanked down after wow, the news came out, and look at what that just did to the stock. It plummeted all the way down to 350. And then
yeah.
they came out and said it wasn't them, and it got back up to $5. So I mean, this is still, I mean, you might be able to see this go right back up to $6. We'll
Yeah.
have to see. It might do it pre-market. So if you guys don't have access to pre-market buying, but yeah, this is all in one day. So this might potentially come right back up and not be AMPY's fault in any way, and that they just unfortunately got, a stock price scare. But you know, if you sold
Uh,
out, that's kind of on you.
They said even in a press release that the spill is not from their operations.
Right. Well, I'm just saying, like, of course, they probably are going to say that no matter what, but is there any way we can prove that what they're saying is correct?
Yeah.
Yeah, there's not going to be much to go outs off because that news story is from yesterday. So anybody commenting on it, but yeah, I mean, I have this worth like $11,
Yeah.
which I know it doesn't trade usually even close to that, but they've been paying their debt off. EBITDA this year was great. What's oil doing right now?
I see
This might be the catalyst I was waiting, since this was on my list for a watch list here.
Kingdom is in the comments as well.
What's Kingdom up to? What's he saying?
No, it's just commenting hard to reconcile this report to a multiple mile sheen because someone posted a report.
Yeah, I mean, some people just said that, California could also potentially hamper down or kind of hit AMPY pretty hard with this, whether it's their fault or not.
But I remember we pulled them up not too long ago, I think, and I think we both liked it then, but it needed something to get a bit lower, which now has happened, I guess.
Yeah, this is sometimes why I think maybe I should be putting in purchase orders,
Yeah,
for like ridiculously low prices
yeah,
because,
yeah.
you know, sometimes something like this pops up and it gets cheap on this. But yeah, I mean, I don't know how much I have to add quite to it, but just going back to my chart here. I just wanted to look at oil here. Yeah, and oil's trending at 78-ish right now. I mean, Brent's at 82. So it's actually a little bit higher than it's been most recently.
Yeah.
All right, well, this interests me. I'm gonna definitely do a little bit more research on this before Monday. I mean, I'll have to see. The other thing too is it might be that I missed it already, which kind of stinks because this was a company I've been watching. Like I said, they are on my watch list. But if in pre-market it gets back up to the $6 mark, like I said, I still think it's trending cheap. But the problem is it's been trending cheap, and I mean it does peak at 11, but that's usually pretty rare.
Yeah.
So
And I think if we, my alert system with news and stuff, it still is broken, and I haven't figured out a way to do it. But imagine if you could pick up some shares here at 358 or whatever it went to. That would be good.
no, that'd be huge. But that's what I'm saying. It might be worth on some of these companies that I put on my watch list, because usually if you're on my watch list and I haven't purchased you, it's because you're just not cheap enough. Because if you're already on
Yeah.
my watch list, it's already something that's interesting to me.
Yeah.
I mean, sometimes it's that I need a catalyst, but
then
it
again,
just
though,
depends.
if you do it in that way, and the news is actually terrible, you probably don't want to buy, right?
Well, but my point would be is that like whatever I set as my purchase would be a substantial discount.
Yeah.
You know what I mean? Where
Yeah.
I mean, if you bought it, maybe I don't know if I would have set it at 350, but maybe figure out a percentage that you'd be comfortable going in on, because if it already's dropped a substantial amount, do you think it's going to drop like a substantial more? Like if something sells off 50%, is it going to continue to sell off another bit? I mean, at
Yeah.
that point you start to get the momentum guys coming in. This is something you see constantly when there's these huge sell-offs and stuff gets really cheap. The momentum guys kind of come back in, because as it gets bought up, it gets bought back in pretty quick.
Yeah.
And it might not get back up to the share price it was at, but it tends to lead to a lot of volume and a lot of exchange,
For sure.
which is more just a product of the markets. All
Oh,
right.
but good.
Here, I'll give you back the screen here just at the end here.
Yeah. They're back. I think we have Winey. Winey has tuned in here at last seconds. He's saying, "Hey fellas, bring on the rights offering."
Yeah.
I got ammo. Cheers. Yeah.
Yeah, no, we agree. We're in the same I'm in the same spot. I'll definitely at this point, if I have to spend money to keep the company afloat and get through this period, I think they're going to make it through this. So to me, it's worth spending the money.
Yeah. And I don't know if you just tuned in, Winey, but I'm happy to see you in the chat again. We went through BNED in the beginning of the stream today, and of course to sum it up very quickly, we are waiting for the Q3 report and the conference call to get some more information. But we agree with what you just said as well.
Yeah. No. Yeah, we'll see what. Yeah, it was like probably the first thing I think we talked about, right?
Yeah.
So.
After I introduced myself as you.
Yeah. Yeah, I gotta go get another beer here. Getting dry in here. All this talking, Max made me go down a wormhole in terms of my valuation. But
Yeah.
Oh, you got Soup pulled up next? That's another one. I've been in Superior.
Yeah, I had them, but what did I see? I think they were just trading a bit close to the 52-week low and below my initial valuation for them. So, but if you have to go, we can talk about them another time.
Yeah, I'll pull them up though. Just maybe I'll go over it on Tuesday.
Yeah.
If I saw anything, maybe not, but because I think I had him on my watch list and I took him back down on deck. I don't remember what the reason was last time I did it, but
Yeah.
either way. But yeah, no, we're interested. We'll see what Monday is. I'm I think Monday might be a bit of a bloodbath. I think it's gonna be a lot of back and forth, but we'll see. It'll be interesting. Yeah, I'm waiting definitely to see what they say about the rights offering, and we'll see where it goes from there. We got a few months to get BNED through, and if they are able to do it, then I think it's going to be great sailing. Because the one thing that we did get is that the FTC had a great quarter. I mean, it was what we were kind of hoping for, that FTC continued to show progress, and it was up 50%. I think, was it? You know what they said? 56%.
Yeah, I'm pulling it up now, the filing here. And we're
So
not
I
going
mean,
to go through it now, but if you go to the SEC webpage, you can pull it up yourself. And in the bottom, they go through shortly the numbers.
but yeah, because what does it say?
Increased by 63.3 million as compared to the prior year period.
Yeah, maybe it was another one that someone had brought up the actual percentages, which it doesn't really matter.
Yeah. No.
But still, I mean, that's insane.
Yeah.
184 million increased by 63 million
Yeah.
from the prior year.
Yeah.
So, and that's another thing too, is that, it says a net loss from continuing operations of 9.9, which I know it's a loss, but that's from 22. So if you just start to do the math and you go a little bit further out, we're getting to profitability here. And that's like excess profitability, you know what I mean?
Yeah.
So, if we can get through this debt period, this is so close to being such an excellent model, and having a long runway, especially since the DOE just got kind of shut down in terms
Yeah.
of changing it to opt in.
So this section of the report isolated is very promising, and then now the issue is the new news on the debt, and the wording there. It is, I can understand why people get scared, to be honest, but a good point is to try to focus on these numbers and the future growth that is possible here.
Yeah, for sure. No, we'll see. I'll keep following the Courage article, because the comments on there are spicy.
Yeah, and I like it even more now, because now you kind of have the opposite side coming out as well. Even though they do it after something negative happen, it could be beneficial to have a discussion going, like a proper discussion from both sides, even though it's a bit, like you said, maybe a bit conflicting styles and not actually a view on the actual business,
Yeah, I mean, if you can't see the growth in FDC continue, and you think that the numbers are going to stay where they're at, I can see why you're bearish. But all things at this point now point to continued growth. And I get it. The next quarter is nothing impressive. It's one of the down quarters. So next quarter is not going to be anything great, which is why they have to do this rights offering, is to get through this next quarter. But after that, we're once again back into the next 2 quarters, which are great for BNED. So
Yeah.
So we'll see. We'll see where things go from there.
And maybe, at least for me, Alto can save Monday a bit.
Yeah, I mean, if things say super cheap on Monday, it's not like I'm not going to buy shares.
Yeah.
The cheaper it goes, the more I'll keep putting in, because I'm happy to get my cost basis to continue to move down here.
Yeah. I have a question, though, Dane, if you have just a few more minutes. You remember on Thursday, the stock price went up to 0.9999, and I saw the day after, at least on Yahoo Finance, they had rounded it up to $1. In terms of the delisting notification, was that enough?
No, because I think it has to end that day at that price.
Yeah.
So I think it still technically missed the delisting, but I don't really worry too much about the delisting thing. Like if
No,
we're
me
able to make it
neither.
through this rights offering
Yeah.
and the stock price reacts positively, like that's what's going to get it to get back on there. At this point, even if it gets delisted, I mean, sure, it wouldn't make it as obvious for maybe people to invest in it, but it's not like people don't still already know about the stock. I don't know. I think at this point, it's everyone kind of still knows what's going on. I mean, obviously, delisting wouldn't be great news, but um, I don't think it would materially change much, and I don't think it's going to get to that point. I think it's somewhere in here. If there's enough good news to get through this next section, you're going to see the stock start to turn around price wise.
Yeah.
But like I said, there could be a lot of volatility coming up here. You could see
Yeah.
some ugly days for it for sure.
Yeah. And
So
also,
anybody who's watching, just know that.
but at the same times, on the conference call, we might get some proper clarity in like the pathway here, which would be very good because right now it's a bit unknown everything.
Yeah, so that's the other thing too, is trying to figure out like hopefully we get a date soon and when we can actually expect a real earnings call. So we'll see.
Yeah. Yeah, but cool. Wine, if you want to see more, we raised a little bit more things in the beginning of the stream. I saw that you said you were gonna rewatch it, but you find it very quickly in the stream. I think we went pretty much straight to BNED this time. This time as well. All
All right, everybody. We'll have a good one.
We will see you on Tuesday then, Dane.
Correct.
And then I think I will just close my eyes on Monday and wait for the stream on Tuesday.
Yeah, we'll see.
Yeah. All right.
Well, you got
Thanks for
Alto
everyone.
too, though.
Sorry?
I said you got Alto too, though, Monday night.
Yeah. I need to. Usually I tune in on the actual conference call on Alto, so I will do that on Monday if I can.
Yeah,
very
no, I'll
exciting.
definitely try to.
Yeah. All right. Thanks for everyone tuning in. Thanks for everyone using the chat. A good question today, Max. Keep them coming, and we will try to answer as best as we can. And we see you guys on Tuesday. Until then, enjoy the rest of your weekend, everyone.
All right, have a good one, everybody.
Bye bye.